Well, wait a minute. If you're the banks, why would you want to foment unrest about banking? Oh, because you want people to be so afraid of keeping their money in the bank, they move it to the Fed.
In today's video, Mark Yusko, the founder, CEO and CIO of Morgan Creek Capital Management, discussed about the Fed raising interest rates and impact on all markets including crypto, the crypto bear market, and if we've hit the bottom on Bitcoin. Before listening to him, please ensure to smash the like button and subscribe to the channel.
It's clear the choke point is happening, but is the run on the banks orchestrated? And is that because of July 2023?
I'm going to say yes, right? You know, I saw this great tweet the other day. It said, breaking, world running low on conspiracy theories as they come true at an alarming rate. And so, you know, conspiracy theory is only a conspiracy theory if it ain't true. And truth, by the way, is an absolute defense. So, you know, I've said some things publicly about Operation Choke Point and about the FTX debacle and about who is responsible. And people, how can you say that? You know, the black hats are going to show up at your house. I'm like, look, truth is an absolute defense. And in the old days, I wanted to influence you. I meet you at the park. I got my backpack. I put it on the bench. I walk away. And you're like, Mark, you left your backpack. I just keep walking. And you look inside and it's full of cash. And you're like, oh, okay, got it. Whatever you want. Not traceable, not, you know, that's the way bad stuff's been done for thousands of years. Well, now people are doing that on chain. Like if you bribe someone or peddle influence or launder money on chain, you either are asking to be found out because it's important that you get found out for the PR benefit. But I think they're actually quite intelligent and quite deliberate. And there's no question in my mind that we're in the then they fight you phase. Then in 2016 to 21, it was when they laugh at you. Oh my God, look at these nerds, geeks playing with this stupid, what a waste of time. Well, then the money starts to come out. Then people convert fiat into crypto because financial repression, right? After the first global financial crisis, they lower the interest rates to zero. Why did they do that? Why did they lower the interest rates to zero? Oh, to save the world. Bernanke saved the world. No, he didn't. China saved the world. China printed $4 trillion, okay? 4 trillion, and injected it into the global financial system and saved the world. Lowering rates to zero did not save the world. Lowering rates to zero saved the banks. So instead of letting the bad people go to jail and the bad banks fail, they bailed them out and basically said, okay, you can borrow from the Fed at zero. Because by the way, have you ever borrowed at Fed funds? I never have. I just don't know how that works. So they borrow and then they buy government bonds. Riskless trade, lever it up 10, 11 times. JP Morgan, it's funny. You've traded before, right? Managed risk. Trading and being right every time you trade and making money 365 days out of 365. What are the odds of that? Zero. Like that doesn't happen unless you happen to be JP Morgan trading desk. They had no trading losses for years. Zero trading days lost. So that's a riskless trade. But here's the problem. Why did they do that? Well, they had to liquefy the balance sheets of the banks. Well, if you pay zero, then depositors get paid zero. And all of a sudden this digital asset comes along and they say, if you take your money out of fiat, convert it into crypto, stablecoin, Bitcoin, whatever, deposit it with us. We'll lend it out and charge 12, 15% because there's not as many deposits. And we'll pay you 6 to 8. That's good for humanity. It's good for everybody, except for the banks. Bad for the banks. You do that with $1 billion, pff, who cares? Bunch of nerds and geeks, yeah, whatever. You do it with $10 billion, now you're kind of annoying. Now you invoke JP Morgan in 1907. I like a little competition before he set up the run on the bank at Knickerbocker Trust, which caused that to fail that he could buy for pennies on the dollar. You do tens of billions of dollars, now you're a problem. So now, starting last year, 2022, we're in the then they fight you phase. And they planned this from minute one. FTX was part of it. All of the nonsense around that. They were I'm sorry, Sam and Caroline are the masterminds of nothing.
Yep.
Masterminds of nothing. Zero chance. They were she was not a trading genius. You're a trading genius. You're a documented trading genius. She, not a trading genius. No, was not doing it. And it's kind of like when they called Madoff a hedge fund problem. There were two problems with that. There was no hedge and there was no fund. He literally hadn't made a trade in 13 years. Because if he had, then he would have been everybody's biggest client if he had that much money doing index arbitrage, which he was not. And there was no fund. He literally would have his brother-in-law transfer the money into his personal account. He just stole people's money and lied. So that's not a hedge fund. That's a fraud. Sam and Caroline were pawns in a very elaborate game that's still going on. And so you asked the question. So Mark, answer the freaking question. Were the bank runs intentional? I'm going to say, yeah, I believe they were intentional. And why? Why would you foment a bank run? Isn't all of banking reliant on confidence? So if we lose confidence in our banks, what happens? We panic and we take the money out. Wasn't that bad? Well, it depends. If you're trying to run a bank, it's very bad. I've never met anyone that I respect that didn't start skeptical. Right? Because this is a big concept that we're going to change the financial system based on a technology. That's a big leap.
Well, I always say
anyone I know who's done the work became bullish. The people who didn't do the work are the ones that still scream about it and the Peter Schiffs of the world. But to answer your question, I Googled Satoshi Nakamoto, trying to figure out who he, she, they are. I'll guess self-proclaimed he once in an email, but we don't know. I think it's 4 people, but that's just my opinion. But when I Googled Satoshi Nakamoto, what came up was Intelligence Central, because the surname Nakamoto is from the central provinces of Japan, and Satoshi means intelligence. And I went, whoa, that is too close to CIA. Wait a minute. If I knew that my currency was destined for failure, which, right, there have been 775 paper currencies in the history of the world, 3/4 of them no longer exist. All the others are down 98, 99, 99.9999%. So if I knew my currency was toast, I had a spending problem, I was just going to issue a lot of currency like we did in 2000, what would I do? Well, let's see. I could convince people to turn it into something else, and then I'd have a back door and I'd just steal it all back. And so I was a little freaked out about that for a while, but it's cool. So Scott Stornetta, who is one of the co-inventors of blockchain technology, is one of the fathers of, or not fathers, he's one of the progeny of the early cypherpunks, but he's a punk. He's a cryptographic progenitor, and he's cited 3 times in the white paper. So in the footnotes, if anyone actually reads the footnotes, you'll see Scott's name there. Scott's a pretty smart guy, and he's a venture partner of he's a venture partner of ours, advisor. And so I asked him this question. And well, I shall tell you one other funny thing. So the first question I asked him was, like, Scott, you were kind of there at the beginning. So I know you don't want me to ask, but I'm going to ask because everybody was going to ask you. So do you know who Satoshi is? And he starts speaking Japanese. And it goes on for about a minute, speaking Japanese. And we're like, okay, Scott, what's the joke? He says, well, if you knew Japanese, you would know that I just said that, yes, I was there around this group of people, and that perhaps I could know who Satoshi is.
Wow.
But if I did, I sure as hell wouldn't tell you. And if you understood Japanese, then this would be funny. But you don't speak Japanese, so now I have to tell you. So that was funny. But I said, could this be true? And he went, huh. I mean, literally grabbed his chin like this and said, huh. You know, I hadn't thought about it. No. And that fast. It's like, no. What?
Then you could
And
sleep.
he said, well,
Yeah.
he said, the way Bitcoin works and the way proof of work functions, it's not possible to have a back door because of the air gap. And it was the first time I heard the appropriate use
Air gap.
of the term air gap. And so that was cool. And I felt more comfortable about that ever since. Just one subtle point. Bitcoin didn't go up. One Bitcoin is one Bitcoin.
Yeah.
What happened is the currency went down.
Yeah.
The dollar went down.
Or the confidence.
And this is a really important point, because what the Fed did in the last 2 weeks is they reversed 2/3 of the QT in 5 days.
In the last year, yeah.
And people say, well, that's not the same. They didn't print more money. No, but they took government bonds onto their balance sheet, which further concentrates their ownership of government bonds, which means they will have to do further liquidity provision, and money supply growth is likely to go higher, which means the dollar fell, and the dollar did fall, particularly versus strong things like gold, which went up a lot, and Bitcoin, which went up a lot, and the renminbi, which went up a lot. And so, yeah, that's... But what are they trying to do? To answer your question, what are they trying to do? They're trying to create fear and distrust, not just of crypto, but of banking. Well, wait a minute. If you're the banks, why would you want to foment unrest about banking? Oh, because you want people to be so afraid of keeping their money in the bank, they move it to the Fed.